We saw here a monetary freakout in March 2020. The same thing that we saw in 2008 when people started worrying about money. When they start worrying about money and the value of money, they go to silver primarily. Next thing I want to show you is the success that the silverbacks have had raiding the COMEX and getting the supply out. COMEX silver stocks, how much silver they're stocking in their warehouses. This is February 2021, when silver squeeze first became a thing. This peak here hit about 152 million ounces. We are now down to 95.84 million ounces, which means since silver squeeze, about 56 million ounces in only 10 months. That is a humongous accomplishment. And it doesn't matter if you get your silver from the COMEX directly, if you even can. I've tried and I'm still trying. And I will say that there is no such thing as a premium on physical silver, because physical silver is the silver market. And really, that's not accurate. I'm going to say something controversial here, and I will say when people want silver as money, the futures market is going to collapse. Well, hello there, my friends. Rafi here from the Endgame Investor, joining Arcadia Economics while Chris is out his crusade against the JCs, Jeff Curry and Jeff Christian. I wonder if we should start a line of bumper stickers, WWJD. And Rawson Benham and all those other guys he loves to go after for guarding the hen house and there being the foxes. I am going to come to you with a weekly silver report, weekly silver update, more on the monetary perspective of things and what's going on. And I hope you guys enjoy it. You can find me at the Endgame Investor on Seeking Alpha, link in the description below. And let's get started. So I bet you're all feeling tingly from what's going on in the silver markets. This past 2 weeks, since November 4th, we've had a big move. I just want to show you the basic technicals of what's been going on. We'll start with this. This is very simple. So back in June, July, in this little rectangle here on the left side, we had the 200-day moving average as support for almost a month on the daily chart. And we broke through that in July, and we tested it as resistance again in August, broke through that, found a new low. Then we tested it again at the 50-day moving average in September, broke through that, found a new low, and this happens to be exactly where I took delivery of my silver warrant on September 29th, which happened to be delivery day for the final delivery day for September silver, when Interactive Brokers finally released the warrant to me, and I became the first client ever to call for delivery on a silver warrant. I own now 5 specific bars in some COMEX in some COMEX depository, and I'm having trouble getting them out, but we're going to try that at a different brokerage, and you will find an update on this in an upcoming video. Then in October, we finally overtook the 50-day moving average here and bounced off it strongly, retested over here in November, and since then we have just come to the 200-day moving average for the first time since August, and we are retesting it as resistance. I don't think we're going to get through it immediately. That's not how technicals tend to work. We might have a little bit of a rest, but we are going to break through it, and when we do, let's check the weekly charts. This is also very similar. Back in June, July, when the 200-day moving average was support here, we saw the same, very similar in the 50-week moving average as support, which we broke through at that time and established what turned out to be at that time a triple bottom. Triple bottom here is 1 from back in September 2020, and 2 back in November 2020. And here's 3, and here's 4, and it wasn't broken on a weekly basis, but now we are back up to the 50-week moving average, testing it for the first time since July. This is exciting. This is a very good technical sign. We're not going to break through it immediately, but once we do, it's going to change the character of the market. And the character of this market has already changed in relation to the US dollar, which I will show you here. The US dollar index, that's the line. The candles are silver. The US dollar index is this line. Back in 2020, from the top here in August, the dollar index was falling, which should mean that silver should rise, but it wasn't, which was a bad sign back then, except now we're seeing the exact opposite. We're seeing the US dollar rise since September, and despite that, silver showing strength. That has not happened in a very long time, and it is a good omen for what is to come. Now I want to show you a chart that you probably haven't seen before. This is not one that people focus on very much, but it is silver's purchasing power in real terms, or silver's price related to other commodities, the silver CRB index ratio. You can see that the silver bull market really began not in 2008, but back in 2005. Because in 2005, silver was at a low in terms of real purchasing power. And we hit that trend line again in 2008. And we hit that trend line sort of again in 2014, came close to it again in 2018. And finally, we have retested it again just now. And now we are heading higher, approaching the 200-week moving average in this ratio. Silver's purchasing power in real terms, because silver is a money commodity and it is monetary, has risen for over 15 years now in a very smooth pattern, and we are about to go on the next leg up by this chart at least. The same thing that we saw in 2008 when people started worrying about money. When they start worrying about money and the value of money, they go to silver primarily, not necessarily to gold. Gold is bank money, and silver is public money, the money for the retail public, what they go to when dollars lose value very quickly. So we saw here at around silver squeeze, the first silver squeeze in February 2021, the silver premium, really the futures discount, was only 15%, and now it is up past 30%. So that is a doubling of the futures discount on silver, or the doubling of the physical premium on silver since the silver squeeze movement began. This is, again, a humongous accomplishment, and all you got to do is keep going, not give up, keep stacking. It is working. One other thing I wanted to show you that is also very encouraging is the gold to silver ratio. This has not changed one bit since gold topped in dollar terms, and that means the demand for silver relative to gold is still as high as it was back then, which means the monetary consciousness among the public is still the same strength as it was back then. And this ratio is going to fall eventually to 15-1. It is now at around 70. At the peak of monetary panic, it always falls to the historical norms, which is around 15 to 15.5-1, and it will do this again. The last chart that I want to show you is proof positive that when the public freaks out about money, where do they go? They go to silver. This is a long-term chart of the silver price versus consumer sentiment index. We see here, 1980, this first rectangle, long, thin rectangle. We see a bottom, an all-time low in consumer sentiment. And when does consumer sentiment fall? It falls when price inflation reaches peaks. When the value of the dollar falls very fast, consumer sentiment plummets. And where did they go to when the value of the dollar falls very fast? They go to silver. So imagine you were shopping in silver in 1980. Prices would have collapsed for you while they collapsed for everyone else who holds money substitutes, which are dollars. The same thing happened in 2008 here. I don't have a rectangle here, but you see that consumer sentiment was at a low as consumer prices were rising in dollar terms very quickly in that commodity spike, and you saw silver have a little spike here. But now in 2011, and again, we reach a low in consumer sentiment. The public freaks out and they go to silver, pushing it back up to $50. Now, this is where we are. We see another low in consumer sentiment with inflation, price inflation starting to rise again, but we haven't seen that massive rally yet, but it is coming. It is only a matter of time. Exactly when, I can't tell you, but it is definitely coming. You just got to sit tight. Here's the same chart, a little bit clearer. 1980, you see the spike here and the collapse in consumer sentiment in blue. Same thing here, spike to 50, collapse in consumer sentiment in blue. And here we see a collapse in consumer sentiment. It's got to get a little lower, and it will as price inflation gets worse and worse. And we will see a parabolic run to I don't even know where. Now, on a wider view of what is happening in the monetary system, these two lines show you in red. First, you have M2, which is the money supply, the dollar supply in the entire US banking system, but it doesn't show you where that money is hiding, what bank accounts, what kind of bank accounts. The blue line here does. This blue line is household checkable deposits. That means money in families, consumer spending power, not in banks generally. This isn't Google's cash, or this isn't Apple's cash, or cash just sits there. This is consumer spending power, and they buy in Christmas gifts and all that other stuff. So we see here that in 2008, what was going on in 2007? Consumer spending power was at a very, very all-time low here. Why? Because everyone was busy flipping houses and spending cash on houses. And when the value of those houses went down, they had to sell. They didn't have a lot of spending power, so you had a deflationary collapse because they didn't have the spending power to push up prices. Then you see QE1 here in that little rectangle. QE1 begins, and you see a little blip in consumer spending power, but that is nothing compared to what is happening now. In 2019, we had the repocalypse, when overnight interest rates suddenly skyrocketed to 10% out of the Fed's control. That is when the current round of money printing began. And after that, you had the pandemocalypse hyperinflation when everything went crazy. Where is this money going? Look at the change in checkable deposits in households. It has gained about $2 trillion since this money printing bonanza began. So basically all of it is going into the hands of spenders, of consumer spending. If you're wondering why it has been so hard to find workers, why the quit rate is so high, why all this is happening, it's happening because everyone's bank account is so flush with cash that they don't need to actually be paid to produce things. So the supply of stuff that should be supplied by workers working is going down, while all the money chasing after these same goods is going up. And when the public finally does freak out about consumer price inflation, you're going to see a parabolic run in silver. Exactly when? Nobody can say, but we know for sure that it is coming. And with that, I'll hand this channel back to Chris, and he will go on attacking Rostin Benham and the Jeffs, the Currys, and the Christians of the world. I wish him good luck, and I hope you enjoyed the closest thing I have to a silver undershirt. And everybody have a good week.
Well, thank you, Rafi Farber, for this week's Endgame Investor Silver Report. The link to sign up for the Endgame Investor is in the description field below, where you can find out what's happening about the silver market, get into all the technicals and all the important stuff, plus the macroeconomics, thanks to Rafi. And this was brought to you by the Arcadia Silver Exchange, which Rafi and many others are involved with, tightening spreads, getting you silver below the elevated premium that Jeff Christian always bitches about, and doing it without hammering futures on the COMEX like Jeff Curry and Goldman Sachs. So with that said, hit the subscribe button and the notification bell so that when next week's Endgame Investor Silver Report is released, you find out about it before the banks do.